Hello everyone. In this video, I'm going to discuss the Polish stock market. Currently, we have a selective correction in the US market and a lot of people are looking for investment opportunities in the emerging markets. I will show the most important indexes of the Polish stock market, which I hope will be helpful in finding companies, and then we'll go through ETFs representing those indexes. Also, we'll take a look at historical performance of those indexes. Finally, I will briefly go through the mid-cap stocks with some stories around them. Before we jump in, I want to be clear that I do not recommend any stocks to buy. My goal is to provide information. Also, keep in mind that while Polish stock market is generally fairly safe and well regulated, and Poland as a member of European Union operates under compliant laws, the market itself is way less mature when comparing to the developed markets. Sometimes can be extremely volatile, which can be scary, but opportunistic at the same time. If you'd like to perform transactions even in just tens of thousands of euros or dollars, you need to be careful because of the limited liquidity on small cap stocks. Also, support via financial data APIs can be limited and sometimes incorrect, and some international tools struggle with that. Also, analyst coverage is sparse for mid and small cap stocks, but actually this is something I consider as an advantage and opportunity. The bottom line is that this is still in some places quite inefficient market, which tends to create nice opportunities for retail investors, but of course that comes with risks. The access to the Warsaw Stock Exchange is these days quite easy because Interactive Brokers supports it, and also others shown on the screen. I'm not advertising any broker, but personally I'm using XTB, Exante and Saxo, all available in Europe for managing my own investments. If you have questions about them, just let me know. Let's take a tour. GPW is a Polish acronym for the Warsaw Stock Exchange. This is, by the way, also a public company which runs the market, and you can, of course, buy its stock. The main index, WIG, contains all of the stocks from the main exchange. On this page, hosted by GPW Benchmark, you can find all relevant indexes, and of course all the links are in the description of this video. Okay, so we have the main index, WIG, and then we have the three key indexes, the WIG20, which is a large cap index, then MWIG40, which is mid cap index, and then SWIG80 for small caps. These indexes capture roughly 30% of the public companies from the main exchange because in total there is around 400 of them. There are more indexes, of course, and the total return versions are good to track the overall performance, as there are periods where dividends can be significant. Also, local ETFs like to replicate the total return indexes. Now let's take a look at the three key indexes. And let's start with the WIG20. I don't invest much over here. It is quite cyclical, but last year total return was around 40% and the 3-year performance was over 100%. So maybe I'm not doing a great job by ignoring this index. For top 3 companies, PKO is the biggest bank. Then we have Orlen, the energy giant, and KGHM, which is focusing on mining copper in Poland and internationally. And of course, because of that, they mine quite a bit of silver. Also, by the way, Poland is quite rich in the copper reserves. From this index, I only own retailers Żabka and Dino, and I also have shares of Kruk, which is the debt collector. Overall, this index is overweighted in banks and financials, and some of these companies are strategic and partially owned by the government, like the mentioned top three. I'll show you quickly how to check the government ownership later in this video on the Business Radar. My preference is to avoid such government-owned company, as it just puts me down in the information chain as a retail investor, and the politics are more important than I'd like. On the flip side, these companies like PKO or PZU, which is the insurance and financial services company, did really well and paid hefty dividends over the years. And personally, I'm their customer. So I'm not saying these are bad companies, but just a type of companies which I avoid to invest, and I'll leave them to big investment banks and funds. By the way, large investment international funds are investing in these companies, and they are also a part of the MSCI Poland index, which is replicated by the iShares ePol ETF. For these all reasons, I prefer to look for opportunities and market inefficiencies in the smaller companies. So, speaking of smaller companies, the mid-cap index is very interesting, and it's been great performer over the last year and in the longer run. And I have some companies from this index, and I'm building a position in ETF replicating this mid-cap total return index. Next up, small cap index with 80 companies. It was also very well performing over the years. So maybe we will cover this more in detail on the next occasion, but there are quite a few interesting companies over here. One additional important note: there's also a secondary exchange called New Connect, which is not as strictly regulated, and it's more like startup and innovation hub. And this means the bankruptcies are actually not uncommon here. Liquidity is low and the overall risk is way higher. So make sure you're checking if the company you want to invest in is part of the VIG index, which will mean they belong to the main exchange, or they are part of the NC index, where for sure you need to apply different risk levels. BiznesRadar.pl. This page is my favorite when it comes to data quality, and it has a few quite useful features. It's available only in Polish, but I enabled auto translate to English, and besides a very few easy to spot quirks, like translating tickers in some cases, or some valuation metrics being misformatted with unnecessary comma, everything is just fine and the page is just useful. First of all, it has the components of the indexes, which I can easily copy to AI for various processings, even as simple as obtaining all the tickers and bulk importing them into Stock Unlock watchlist. Then it of course has a solid financial data and metrics. Finally, the insider ownership. Let's take a look and see if KGHM has the government ownership. So I'm opening the page, then I go to profile and shareholding. And as we can see, the biggest shareholder is State Treasury. That means the 31, almost 32% of the company is owned by the government. Also, by the way, you're seeing here a lot of probably familiar names like Goldman Sachs or Allianz or Nationale Nederlanden or some other financial institutions. So navigating to components page is a nice starting point just to go deeper into certain companies, but also the way I use this is to just have an overview of the entire index, and I'm selecting the financial analysis metrics I'm interested in, and then I'm looking at the entire index. What I want to do now is to go into the GPW company, the Warsaw Stock Exchange company, which runs the stock exchange. And here we're seeing one of the mistakes where Auto Translate turned this GPW ticker into Warsaw Stock Exchange acronym, but it shouldn't do that because it's a ticker. Anyway, it works. Just the name can be misleading. And then we can take a look at the financial report, income statement, and most of the data is available in the free version. It's quite generous. It's nice that they don't force you to buy a premium version for the data. But of course, if you want to have all the data, you need to pay a premium. It's probably around $100 a year, so not a lot, but yeah, it's good that still you just don't have to pay for that. So it's still super useful even at the base free version. ETF review. Let's start with EPOL, available in the United States. It's 1 year plus 60% and 3 year plus 178% performance is quite remarkable. However, since inception in 2010, it's been quite cyclical. So it's fair when people say it's amazing for trading, but not for very long-term investments. If we look inside, the top allocations are like in VIG20. But there are also some of the largest mid-cap companies included with the lowest weights inside this ETF. Next ETF is similar but not the same. It is available in Europe under tickers IPOL and IBCJ. For example, in the Deutsche Börse in Euro, or in London Stock Exchange in US dollars or British pounds. If I remember correctly, this one is even more concentrated because it used to have just the top 16 companies from VIG20. Of course, the overall performance differs, but will be somewhat similar and highly correlated. Now let's jump to the ETFs available directly on the Warsaw Stock Exchange. This one from Beta replicates the VIG20 Total Return Index. Then we have two of my favorites, the mid-cap and the small cap ETF, which in my opinion give a better exposure to Polish economy, and that's why I'm continuously adding both of them to my portfolio. The cost of these ETFs is unfortunately still quite high, around 1%, because they are small, young, and competition to beta ETFs will probably start really appearing this year. By the way, the investing culture is in the early stage in Poland still. Previously, people were mostly investing in the real estate, but this has dramatically changed in the recent years. And also the government prepared some tax incentivized accounts not long time ago, and they are working on one more for this year. So overall, this will be good for the stock market and its performance. Now let's take a look on the performance of the mid-cap stocks. As we see, for the 5-year period, they beat the S&P 500 index. But I want to point out to the volatility. The stock rushed after the COVID crash, outperforming the S&P 500, but then it crashed. For the first time, as marked by the first red point from the left, February 2022, the Russian invasion on the Ukraine. And for the second time, together with the crashing post-COVID bubble, so the total crash was over 50% in a 1-year period. The good thing is that it has fully recovered basically in the same period as the S&P 500 and went back to outperforming in the longer run. The tariff drama from April 2024 did almost nothing to the index. And recently we are seeing very strong outperformance of the index. My professional activity lands in the US technology industry, and I'm heavily invested in the tech and semiconductor sector. So I have my professional biases, but I'm looking at various other companies and learning on them. So here I have the list of the mid-cap companies from the index, and I've imported the data into Stock Unlock as a watch list, and I will go through the companies which are interesting from my perspective, and I'll share a one-line description on each company. Just to be clear, I'm not recommending these companies, and I'm not trying to say that these are good buy opportunities. ACP, Asseco Poland, is one of the software companies from the Asseco family. They do have proprietary products and executing IT projects. There are 2 more Asseco companies on the stock market. Benefit Systems, they are very successful in providing various employee benefit solutions. Then we have XTB. This is the broker and fintech. I used to have them in my portfolio, but I sold recently on the top, and I'm using them as one of my brokerage solutions. Next one, we have Nevac. They build trains, and it's one of my biggest recent missed opportunities. Then we have another Asseco, Southeastern Europe. That's another from the family. By the way, the ownership and structure of this Asseco companies is quite complex, and this is something I do not necessarily enjoy. So next one, GPW, the Warsaw Stock Exchange company, really well performing, pays nice dividends, good, of course, future prospects given how the Polish stock market is developing. Then we have Cyberfolks and Welcome, and these are interesting because together with Shopper, which is listed on the small cap index, they create interesting network effect. And real synergies with supplementary solutions. And I really like this approach. And in the e-commerce, this is one of the key factors which is required for future success. So also, Cyberfolks has a controlling stake in both Shopper and Welcome. GPP, this used to be just a job portal, really, but I'm observing how and if they will manage to evolve in the digital recruitment solution space and all the changes that AI brings to the working environment. And next up is one of my favorite, Rainbow Tours. This is the travel company I have in my portfolio. I really like the way they run this business, and I'm planning to prepare dedicated video about them. Finally, Mobrook, this is industrial waste management company, including dealing with hazardous materials. They deal with waste recovery and recycling as well. In the small caps, we have yet another Asseco company. Then Signity is also a software company which had a great period since they got acquired by Topicus, which means they belong to the Constellation software gang. And recently they are in the 30% correction. So that's definitely interesting to watch if you're into this whole SaaSpocalypse topic. Then we have Cryotech, which is a hot space company. They manufacture components and systems, for example, working for the European Space Agency projects. Toypol is focused on the construction and modernization of the railway infrastructure. That's definitely very opportunistic area at the moment. VRG is a Vistula Group, a fashion company in the recovery mode. So I'm not normally interested in investing in fashion companies. I actually avoid them, but I'm looking at this company to actually learn. And I have clothes from this group. So, it's always good to be a customer and look from this look on this company from a customer perspective, but also from the investment perspective. Unimod, in general, I would call them an energy distributor company. Then we have DataWalk, which deals with the business intelligence services. Also, I highlighted Arctic Paper, and I'm curious if this cyclical company will manage to recover from all of its struggle, because the demand on various types of paper is, of course, going down. Finally, Electro Team. This company deals with all kinds of sophisticated electric and automated system installations in the construction industry. And this is definitely a beneficiary of the huge government investment, for example, in the countrywide modernization of the electrical grid. At the bottom, we have V10, which is another interesting, I would say, fashion company, because they produce, they create leather products, shoes, and so on. So I'm curious how they will deal in this competitive market. More on Nevac and the missed opportunity. Of course, there are thousands of stocks where you can look at the past performance and say like, oh, I missed the opportunity and so on. But that's not my point. I'm highlighting this one because as a retail investor, I had all the information at hand. I'm a passenger of the Nevac trains, where I'm using them to go to the office every day. I knew what is the trend. I knew the increased amount of trains, the public transport development strategy in the local districts in Poland. but I simply didn't look specifically at this company as a possible investment. So basically, I missed the opportunity from the Peter Lynch's playbook. Of course, this doesn't mean the company can be a multi-bagger from here, but I simply didn't have time to analyze its future potential. By the way, this is Cyberfolk's ownership listed in the shopper, and welcome pages, as we're seeing, they have nearly 50%, which gives them real control over those companies. There's a lot more to explore on this market, but the question you might be asking now is, can you make money? One way to look at this is to look at the mid-cap performance, but a slight beat on the S&P 500 is a boring and uninspiring answer. I have something better. Here's Paweł Malik, the living legend of the Warsaw Stock Exchange. He is investing in the Polish small-cap companies, including the remaining 60% of the companies not included in the three indexes we discussed today. The results are absolutely legendary. The CAGR for that, if he would invest all those 200,000 from the get-go, would be about 20%, which is already a smashing result. But we're not talking about turning 200,000 into 2.4 million in 13 years. It's bigger than that, because this is how his inflows were over the years. And this is confirmed because the limits on this retirement IKE account are set by the government. This is why he is showing the extended internal rate of return for irregular growing investment. So Paweł is really showing the huge potential of this market. I hope this video will help you navigate on the Polish stock market, and I wish you great returns. That's all for today. See you soon.